Good morning, traders. Steve Gans here, and welcome to the weekend update for December 1st, 2024. So, first thing I want to note is I am going to share this chart. I'm going to put a link in the description down below. So those of you that are interested in looking at this chart in more detail can go ahead, click on that link, and this chart will open for you. Now, what I wanted to share here is a couple of key things. This is a chart of SPX, which is our main index, the S&P 500 index. It mirrors the SPY, but it's 10 times larger. Now, it's an options trading vehicle, which is largely what I trade. All that said, the SPY is going to essentially have the exact same pattern that this has. It's just that the numbers you're going to see on the side here are 10 times larger. So, SPX, what I want you to notice specifically here is going back 1 year from December of last year, we are in a long-term uptrend channel. That's this blue channel that you'll see here. Now, along the way, we have had some pops and drops that hit what I'll call support and resistance levels. Some people call them supply and demand zones. The important thing to note about charting and technical analysis, which is kind of what I'm doing here at a high level, is that things aren't necessarily exact. Like you will see things like here where we blow out the bottom of this channel and then we recover back into the channel and the channel kind of maintains its integrity again. There's times when we pop out of the channel slightly. And this channel's somewhat subjective as to where it gets drawn. This is where I've drawn it. What I like to do is I like to connect at least 3 points along the way. So let me get my pen here and see if I can maybe draw this a little bit better. And the pen's a little new to me here, but let's see how this works. So, we've got 3 points of connection here. And then, this one is a little bit outside of that window. I'm not overly concerned about that little bit being out. So, but those are the types of things I'm looking for that general trend line. Then you see things here, and I've got this labeled long-term channel here. And then I've drawn in support and resistance at various locations. So this had been resistance. We hadn't been popping through here. And then we finally popped through, and then we came back. Then it acted as support right in here, acted as support a few days. Finally fell through that support, actually fell out the bottom of our channel. At this point, I could have very easily started moving towards some bearish positions, but I would have had to been on alert and quickly known that, oops, I'm wrong. This is starting to shoot back up into my channel. So again, technical analysis gives us clues, doesn't necessarily tell us the entire and complete story. Now we pop back into the channel. You see we come back up here, which is pretty close to this prior high, and we rolled over. Well, we rolled over right to the bottom of this channel, or what had been our prior resistance now turns into support. There's psychological reasons for this. When people see a chart like this, and this is a chart that's on a daily basis, each bar represents 1 day in time. That's probably one of the most common charts that's looked at out there. So when lots and lots of people are looking at this, lots and lots of people have the same general lines drawn on their chart, these are things that people will tend to pay attention to. The more people that see it, recognize it, the more likely it is to, hold true going forward. Now, we have then another breakout. So we break out here above our old highs, and then we pop up, we roll back over, but we roll back over. Let me enlarge this a little bit here. We roll back over right to where we broke out from. And then we rally up. We have a day or two of resistance at this old high, then we pop through. Then we come back down to where we broke out here, and we're holding there. Well, then we break down. Now, in the weekend update a couple weeks ago, I said, if we break through this, my expected point to come back to is generally in this range right here. Then we rallied back up, had a huge gap up on the election, went above our prior highs, which are here. And I also said after this rally that if this rally stalls at the top of the channel, which I did expect it to do if it rolls back over, it's probably going to roll right about to here. Then in last week's weekend update, you'll also notice when I said we were at the top of the channel here, I expected a little bit of a pullback, maybe about a 50% retracement, and then we could rally back to the top. At that point, I wasn't sure if we were going to roll over or if we were going to break out. Now, we did on Friday break out. Let me clear some of these things I just added here. So we did on Friday break out. Now, that said, that's a very small breakout and it's on very low volume. Now, it's on low volume because Friday is a Black Friday. Lots of people are out of the office. Professional traders, most of them are not in. So it's normal that that would be a light day. Many times on Black Friday or any holiday for that matter, whatever move happens on that holiday is a little suspect because it has very few professionals involved in it. It's mainly driven by retail traders. Generally speaking, retail traders are not the brains in the room, so to speak. Not saying that some of them aren't, but when you're talking big money movements, that tends to happen more with institutions. So a move that happens on largely retail buying or selling, in my mind, is always a little suspect. So what that means is I want to wait and see what happens on Monday and Tuesday now. I want to wait and see, is this breakout real? Are we going higher from here? Or are we likely to start rolling back down? I don't have a real clear picture here right now. I am, of course, bullish given the way this chart looks. What a chartist looks at, or what a person doing technical analysis looks at, is are we making higher highs and higher lows? If you're making 2 or 3 consecutive higher highs and higher lows, by definition, that is an uptrend. Now, keep in mind again, this is on a daily chart. If I go down and I look at a 5-minute chart or a 10-minute chart, things are going to look completely different. So I have to have my chart kind of in line with my trading plan. I tend to trade a little bit longer as far as days to expiration when I'm trading my options. I tend to trade in the 15-day out to 60, even 90 days. So for me, looking at a daily chart makes perfectly logical sense. If I were trading 0 DTE and I wanted to do that by looking at charts, the charts I'm looking at might be much, much shorter in nature. Maybe at that point, I'd be looking at 5 or 15-minute charts, and I'd be going through the exact same process that I've gone through here, putting in channels, looking at support, resistance, etc. From my experience over the years, anything that happens on a 15-minute chart or a 5-minute chart is less meaningful or less likely to play out in a traditional pattern because there's a lot fewer professional traders that are looking at a 5-minute or a 15-minute chart. There are certainly traders looking at that, but it's not your big institutions, which are mainly the people driving the market. So for me, I tend to do most of my technical analysis on a 1-hour chart. Now, we've looked at all about the SPX here. Couple other things that one other thing on SPX, you'll see this channel here. Now, I want to go back in time. This is really, I think, really important. So let me just shrink this chart down and look at this. So prior to COVID, what I did was I duplicated this channel and I just drug it over here. Now, it looks like it's at a slightly different angle, but I just duplicated this exact channel and just drug it over. So it is accelerating at the same rate, essentially, that we were prior to COVID. So we were in a very solid up channel for a number of years there from October 2020 right up to the start of COVID. Of course, COVID and then all the financial movements that the Fed put in, things like that during COVID, had massive impacts on what our markets did during that time frame. But then we resumed the march, which is essentially what's happening here. So it's pretty important to look at things like that and recognize that what we're experiencing right now certainly is very bullish, but it may just be a continuation of the prior moves we had going back before COVID. Now, let's also take a look at the rut. So I like to look at that rut and kind of the same thing here. So rut has been running again in a channel here. And I drew those 3 points, 1, 2, 3 points. And you could even say there's even a fourth point here. And we have the same on the upside. We have essentially 1 point, 2 point, 3 point, 4 point, 5 point, 6 point, 7 point, 8 point. So rut has a very defined channel here also. But I want to go back also, and let's take a historical look at rut, because you see some interesting green lines here. And you'll notice, coming back to my pencil here, that these green lines do tend to kind of generally correspond here with some resistance, a break of resistance, a little bit of support. Here's some resistance again, and then, final breakout, and then a little bit of support here again, all along that line, kind of the same thing up on the next line above that, and even the final line above that. So what might have prompted some of that? Well, let's come back and take a look historically at rut. So this comes back also into 2020, 2021. We had some very large channels. Rut essentially traded in this massive channel here for about a year and a half time frame prior to COVID. So again, COVID then hits. We end up taking this big drop here, chopping all around, depending on what the Fed was doing, depending on how COVID announcements were going, all that sort of thing. And then we resume this channel. Now, my guess is I didn't do this, but my guess is if I duplicated this channel and put it over here, it would probably be pretty darn similar. Not sure about that. But anyhow, if we look at these particular points in time where I've drawn rough support and resistance lines, look how those align over here, again, with support and resistance. And this is not an exact science again, but it boils down to who all is looking at these charts. Is the big money looking at these charts thinking that, if we get back to this resistance level, I'm going to start dumping my large positions in Microsoft or whatever. And I think that's exactly what's been happening in some of these locations. So that's what's happening here. And that's what creates these waves or these patterns. So the rut is now back right now within a few points of all-time highs. So prior to that, these different highs in here and things, those were highs that were relative highs in recent times. They were not all-time highs. So now rut is at all-time highs. So this is going to be really interesting because rut's at all-time highs. And of course, SPX is at all-time highs, having popped out just a little bit on Friday. So we're going to need to see how those react. Again, my expectation is probably remaining in the channel on both, which means maybe a little bit of a pullback in both. Doesn't mean we're breaking any uptrends or anything like that. It's just a normal, what we call back and filling in our market. And another thing to note here, I want to take a quick look at VIX, the volatility index. So let me just enlarge this a little bit to more recent times. So our volatility index has really also run in a sideways channel. Now, volatility is a little different. It's what's called mean reverting. So it works on a 0 to 100 scale. And when volatility or fear in the market gets high, VIX gets up here, but it's as soon as that fear subsides, the VIX will drop back down. So it's normal for it to do what it's doing here and kind of run in a channel. And what we're looking for as options traders many times is we're looking for these spikes, because when volatility gets elevated, when fear in the market gets elevated, that's when we as options traders, or specifically options sellers, want to look at specific trades. The butterfly is one of my favorite trades for that type of market. Again, there's a lot of reasons why. I can't go into the full lesson on butterflies here, but just know that if you're a net seller, a butterfly, a condor, selling a straddle, things like that, when volatility is high is usually a better scenario for doing that. You're going to get more for those options you're selling, which will give you a better reward to risk ratio overall in your trade. But I want you to notice here right now is that VIX is back essentially at pretty much close to an all-time low. that also tells me that we're in bullish mode. There's not any imminent fear in the markets right now. So that kind of wraps up the weekend update as our markets outlook goes. And I am optimistically bullish still in our markets. I do think we're going to maybe chop a little sideways, maybe a minor pullback. But overall, I think we're going to newer highs here between now and the end of the year. Very often, there's what's called the Santa Claus rally, which is pretty much as consumers start spending a bunch of money, that sort of fuels companies, fuels markets, the Black Friday, the Cyber Mondays, et cetera. That puts a lot of money out there into the markets, going into these companies that make up the S&P 500. And therefore, of course, that spikes their earnings. And we won't know that for a quarter or two till the next earnings season. But that's the normal expectation as you get into the end of the year, which is often why we have what we call the Santa Claus rally. So that should wrap things up here.